The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I'll be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to a Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally, and then they tanked the market, and I didn't know whether to reshort at the close. And then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 22nd wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This I call your self-appreciation inventory. You know, take a moment and write down the many things that you've accomplished throughout your life. How about last month? How about last week? How about even yesterday? What is it that you accomplished? You know, in today's day and age, all you really need to do is to begin to use that memo pad that's on your smart device. That memo pad, folks, is the most powerful tool that you have because it's your memory pad. So use it to begin writing your achievements down. You don't have to get them all, but start writing your achievements down. Use that memo pad. And what I want you to also do is on a separate page, on a separate memo pad, I want you to take a moment to write down the things that you've not gotten to yet. You know, the things that you could achieve, but you have not yet done so. You know, what I want you to do is I want you to write those things down because these are the things that you want to achieve. You know, maybe it's over the next 7 days. Maybe it's the next 2 weeks. Maybe it's the next 6 months, year. Whatever that is, you want to go ahead and write that down on your memo pad. My question to you is this. Would a game plan make a difference? Would a different direction than the one you are currently traveling in, would that make a difference? What is it that you need in order to get going on a list of the many things that you want to accomplish in your life, but you have not done so yet? And for those of you that are already on your way, the question is, what massive action could you take today to propel yourself towards those goals? What massive action can you take to achieve your goals? It's the same question that you and I, each of us have each and every day. Look, your self-appreciation inventory, that's that first memo. That's all the things that you've accomplished in your life. That self-appreciation inventory shows you that you've got a solid foundation. But now it's time for even more. You know, you're on the right track, and now it's time for another gear because there's always room to grow. There's always room for more knowledge. There's always room to perfect our skills out there. You know, I don't like using that word perfection. But we can always perfect our skills. We can always get better at what it is that we do. I would never ask you to do something that I don't already do myself. I'm always working at increasing my skills. I'm always working at becoming better. You know the expression, if you want more, you've got to become more. You know, it's that same passion. That's what led me to develop the Rhodes Momentum Indicator. It's not going to just stop right there. You know, that indicator turned into a market analyzer. That market analyzer turned into trading strategies out there. The truth is, you and I, we never stop learning, we never stop expanding, and we must never forget to take time to appreciate ourselves for what we have already accomplished thus far in our pursuit for what it is that we want to continue to accomplish, for who it is that we want to become. That's why that memo or memory pad is so important. In fact, I think it is the most important tool on that device of yours that you've got, that smartphone, that iPad, that whatever pad it is out there. And what you want to be able to do at a moment's notice is you want to be able to quickly reflect upon the good that you've done, because the universe is going to do this. It's going to test you. It's going to throw you a curveball. It just simply wants to make sure that you really want what it is that you want out there. And for most of us, all we really want is happiness. So we must never forget that happiness is simply all about becoming the person that we want to become. So take time today and appreciate yourself for all that you've accomplished. And then start taking massive action for everything that you will accomplish. Let's go see what these markets are accomplishing. The bulls and the bears are out here right now. You've got the Dow futures. They're trading down 20 points. They're trading at 16,335. That's really the only weak link in the marketplace. You got the ES Mini. It's trading up 75 cents. Not a big deal. Trading out at 1839.25. NASDAQ futures up 6.5 points. They're trading at 36.16. King dollar back 9 pennies right now. It's trading out at 81.13. We've got some movement in the currency market, but it's all coming from the Great British Pound. It is breaking above that long-term consolidation area. Oh boy, that sets up big moves to the upside in the Great British Pound. We'll take a look at that. Goldilocks back $1 right now. It's trading out at $12.40. Silver is totally flat. It's trading at $19.87. Light sweet crude up 81 cents, trading out at 95.78. Natural gas up 15 cents. That is on the rise. That's up 3 3/10% here this morning. Let's take a quick peek around the globe, see what we've got going on. You've got the FTSE. Well, we know the FTSE here. It is flat. It's down 1 point, but it's trying to break above a large consolidation pattern. I think it was a 15-year consolidation pattern, if I'm not mistaken. You've got the DAX. It's up 9 points, but basically a flat market. The Nikkei was up 25 points. The Hang Seng up 49 points, but the big move out there was the Shanghai. You know, we've been watching that market. We're going to have to go take a look at the ETFs out there, because that thing was up 2% last night, up 45 points, and that was right near right at a Gartley buy pattern. That is in the markets. You know, let's go check out in the pre-markets here after the bell last night. You had IBM out with earnings. It is the Dow that is struggling out here. And if we take a look at the Dow, you know, the weighting structure within inside the Dow, when the new components were put in there, the weighting structure itself changed, and Visa is actually the largest weighting inside of the Dow right now. It's got about 8 7/10% or so, right around there as far as the weighting with inside the Dow. IBM is number 2 now. IBM's a little over 7%, about 7.4%. Goldman Sachs about 6.85%. Boeing is 5.5%. 3M is 5.5% out there. GE still number 27. Down at about 1% of the entire weighting inside of the Dow. So we're going to take a look at, let's go take a look at, let me switch charts here. Let's take a look at IBM. So IBM formed, IBM off of the, but now what IBM has done here, if you're watching us on Tiger TV, let me actually get rid of one area here just to expand it just a tad. If you're watching us on Tiger TV, thanks so much for doing that. If you're listening on the radio or your mobile device at TFNN.mobi, we appreciate that so much. I'll describe to you what we're looking at, and of course you can catch the replay of this show on Channel 9 or get the live stream on your smart pad, your smart device, by going to the homepage of TFNN.com. Upper right-hand side, you'll see that button, 3 little smartphone devices. Click on that. The show streams live to you. What you would be taking a look at is IBM. It broke through a consolidation pattern, a 30-point consolidation, came back inside that consolidation level, which is right around on the daily chart, right around the 181-ish area. Now, what it did was it actually formed a 0.786 Gartley buy pattern. In fact, it's got beautiful Fibonacci numbers. It's got a 0.618 retracement. That is your A to B leg, your A to B leg of your X point. That was the A leg coming off of the low of October 17th, and that was at 172.57. Makes a move up into a little doji on November 21st. The leaves start falling off the tree. Sorry about that. How about that? The leaves start falling off the... I'm going to grab some water here. Excuse me, sorry about that. Every now and then, got this big breaths going on, and every now and then I get a little piece of dust that comes inside. So anyways, we had some leaves that were falling off of the tree out here after that little doji. That was on November 21st. IBM makes a run for its lows. It tests the low out here with lighter volume. Now, that was a high volume low from October 17th. It gets back into the trading range, that consolidation there out there. And it forms a 1.272 expansion of your B to C swing point. That's really your C to D level out here. And it does it with a nice wide-ranging bar. But that area has held. Now, we're going to see IBM open up right around the... let's see where it's trading at right now. I need to switch pages out here for that. The last trade in IBM fired off only 50 shares. It looks like it was at... $180.98 out here. So at 180, you're going to get back below the lower part of the consolidation range. Let's take a look at retracements here of this C to D leg out here. Let's see where 180 takes us to. 179.64 is your 0.618 retracement. We'll have to see what kind of volume. Now, that's going to put some pressure inside of the Dow for sure, with it being the number 2 weighting structure out here. But IBM probably gives us a pretty good idea. If IBM is able to fend off this, and IBM, they missed, they missed their numbers out here, but let's not worry about what they did or they didn't do. Let's just worry about how the market is going to respond. So it's going to open up somewhere around the 180. Well, right now I've got it trading out at 181.17 out here. So from IBM, we're going to learn quite a bit about the market. Now, what we're also going to learn is if, in fact, IBM can take out the 190.81 level. This is a solid 0.786 Gartley sell pattern. And if these patterns fail, they turn into butterflies. So if, in fact, IBM, if the bulls are able to fend off this move, that says IBM ought to trade up to 200.33, but I would say 207.84, the top of the consolidation range. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A client of mine sent me an email here late last night, early this morning, actually, while I was sleeping, and I didn't get a chance to get to it. And so we're going to do this one here together for him. He is in a trade. He's in AUI, Yamana Gold out here. Says he's up about 7% on the trade as of yesterday's close, and was looking for some assistance on where this might head to and where he ought to take a look at putting in a stop. So I thought this would be a good opportunity for us to do. And I just pulled up the screen here. I tried pulling it up before the show started. I just didn't get around to it, and so I didn't get a chance to look at the chart. So we're just going to do this one together here. So let's go through a number of different tools. So I've got the chart up on my screen here right now. It's Yamana Gold that we're taking a look at. It closed out at $99.82 here yesterday. The horizontal lines that you see on my screen out here, those are the primary trading range boundary lines, brought to us by Bud Rolfs out there. This is where the system here that I've created goes out and electronically identifies the largest number of co-located opens and closes. The black or the solid navy blue line on my screen, $10.63 out there. That's where you see the largest number. That's the area. So we don't use the exact penny out here. So we're just, kind of round it just a tad or so. But right around the $10.63 3-cent-ish area is the spot where we've seen, or where Yamana Gold has seen the largest number of co-located means it could either be an open or a close out there. You're above 947, 950. That was a primary trading range boundary line. So the question of where this thing ought to head to, I would have to say about the $10.63 area should be the first spot that it would head to. Now, yesterday had some nice volume, as did many of the miners out here. If we take a look at the swing point that it's traveling up into, it's going to be the October 28th swing point. Now, in the case of Yamana Gold, AUY, it's got volume of 5.3 million shares out there. And yesterday it did volume of 9.6. Got up to a high of 998. The low of that swing point was 1014. So it didn't make that swing point, but it's coming in there with volume. So I would say it's pretty but it's pretty safe to say that 1043 ought to get tagged. Maybe it's 1063 out there, right around that range, where you would see Yamana Gold move to. So that would be one of my projections. Of course, I'd need to write back to him and really ask about what the length of time that he wants to hold on to this trade. Because if we take a look at it, if you're one that believes that the miners are off the bottom, then you've got to be willing to take some back and forth. If we take a look at a weekly chart, well, that's not you can tell this chart hasn't been here doing too much here. And boy, look at that. This chart really goes back quite a ways. Let's just get rid of everything inside of Yamana Gold out here. And if we take a look at what Yamana Gold did on a weekly basis, is back here in June of 2013, it made a low of 855. It makes that low with a volume of 45 million shares. That gets tested with only 37 million shares, tested again here with 26 million shares, tested with 35. So the low of Yamana Gold here has been tested pretty well, and that's right around the $8.55 range. Now, it's trading inside of the weekly swing point out here. That has got volume of 42 million shares. We are inside that with lighter volume this week, of course, so we were closed on Monday, so you would really need to do the math. Of course, the top of that swing point here is about 1043. So you'd have to say it's pretty safe to say that 1040-ish area is likely going to get tagged. Now, the question's going to be if this thing can close inside 1092. 1092 is a swing point from August in 2013. The 1092 is the low of that. If it can close inside there, then 1252 becomes its target. So the real question is, do you let the market take you out? Where do you put your stops in place? And what I say, one of the best tools out here is to just simply use the average true range. So the average true range is part of the tools that I provide to all of my subscribers. If you haven't had a chance to test drive Mastering Probability, maybe that's the massive action that you ought to take today. Go over to the homepage at TFNN.com. You can give it a test drive for 30 days, unconditional money-back guarantee. This automatically helps you to identify stop areas. In the case of Yamana Gold out here, well, we can see it's got a 31-cent average true range. That's over the course of the last 9 days. I say 9 days because we had a holiday in here, because we had a day off. It takes the high and low, accounts for gaps out here. And so your stop wants to be at least 31 cents. I say some derivative of that. And usually you like to use a Fibonacci expansion. So if you just multiply 31 cents times 1.618, to me, that would be the stop that you would go ahead and put in place. That would be your trailing stop inside of this. That would be the first place that I would take a look at. And then you just keep moving it up and let the market go ahead and take you out. So that's on Yamana Gold. Looks pretty nice out there, AUY. And during the break, I'll go ahead and finish this off and send an email off to my client who had asked that question. 877-927-6648. I'll take your questions. Just give me a call. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading down 20 points, trading out at 16,394. S&P is up about 2 points, trading at 18, close to 1846. Composite up 8 points at 42.34. Russell 2000 up nearly 2 points, trading out at 11.77-ish and change. Apple up $2 and change, trading at 5.51. Microsoft down 25 cents. Google up $2. Cisco up 9 pennies. Intel back 33 cents out here. Intercept Pharmaceuticals up $17 this morning. Vision China Media, VISN, up 44%. That's up $10. Azimil Holdings, ASML, up $4.50. That's up 5%. Norfolk Southern, up 4.5%, up $4 and change. Brinker International, up $3. Evoke Pharmaceuticals, up 30%. That's up $3 out there. United Technologies, I believe, maybe out with numbers here before the bell. UTX is the ticker symbol. They're trading up 2%, up $2.40. They generated net revenues here of $16.7 billion versus $16.44. I should see the operating profit, their Q4 operating profit. I don't know, operating profit. Here we go. Looks like $2.3 billion versus $1.75 billion out there, so not too shabby. To the downside, leading the charge, you got IBM. It's off $8. Down 4% here this morning. Wynn Resorts just behind them. They're off $4, down 2%. I don't see any earnings or news releases there. You got Coach, COH is the ticker symbol. They were out with numbers. They generated sales $1.4 billion versus $1.5, so they missed their top line and their bottom line. Net income $297 million versus $353. They're down about 6.5% here this morning. Allegren Inc. AGN is the ticker symbol. They're down about 2.5%. Let's see, what else do we have? Melco Crown Entertainment down 5%. That's off about $2.33. Our call number 877-927-6648. The consolidation continues out here. We have been traveling basically north and south, sideways in a consolidation pattern here, really for quite some time when we start pulling it back and seeing the range that price is traveling in. But it's the Dow that's the weak link out here. Now, inside of the Dow, you have Visa that is up 98 cents right now. IBM is back $8. You've got Goldman Sachs, again, third weighting structure up 74 cents. Boeing, the fourth weighting, up 90 cents. 3M down about 24 cents out here. Chevron unchanged. United Technologies up a couple bucks. That's your top, about top 6 or 7 with inside of the Dow. You know, if we take a look at the NASDAQ, let's take a look at the NASDAQ futures here. Yesterday, coming down, you know, during the time period between 11 and 11:30, you had the NASDAQ futures, the NQ get down to 35.79.50. You might be saying, hey, Steve-O, what else is down at 35.79.50? We've seen the NASDAQ futures break that shorter-term consolidation. It's done it twice to the downside. Now wants to try to break it to the upside here. And that consolidation pattern, really the smaller one, the yellow rectangle area, now that we've seen it move its way down to the bottom of that, really sets up a larger consolidation. So we ought to go ahead and change that. But to answer your question, because somebody was asking what else is hanging down in that 35.79. What did I say? 35. What did I say? 35.79. Somewhere right around there. Well, it's that little red line going across my screen. Interestingly enough, you know how we talk about old support becomes new resistance, or old resistance becomes new support? Well, in this case here, the old resistance line really was the gap down that took place here back on January 2nd. The top of that gap, which took place at 7 o'clock in the morning, the high of that bar, and I'm glad you asked me, was 35.79. 35.79, that red horizontal line going across my screen, that, for whatever reason, is acting now as the support area. And what we can see here inside the NASDAQ futures is we can see that actually let's just go ahead. Let's just rename this consolidation area since it has expanded itself, since we know that becomes a support level. And let's take a look at what the NASDAQ, because, you know, you've got the Dow that's got 30 stocks, and it's doing everything it can to try to pull the market down. It's not doing a very good job, by the way. At least it has not done a good job yet. And if we take a look at this consolidation pattern, we pull this off to the side here, you would say that you'd go from 35.79, so somebody out there do the math for me, would you? 35.79, I can only multitask so much, up to 36.10. So what do you got? 35, well, I guess we say 35.80, so that'd be 20 plus 10, so what do we got? 31-point consolidation. How's that for doing my P's and Q's, my math? What did I say now? Did I say 30 points? I think I said 30 points. I don't remember what I said out there. See, I got a math. I'm good at math. I may not be good at remembering what I just said. 36.10 to, about 35.80. So about a 30-point consolidation is what we're dealing with here inside of the NASDAQ futures. So let's just make this 30-point consolidation. And let's figure out what the high end of this consolidation pattern would be. Well, that's pretty simple. Let's make this a little bit larger, make it a little bit easier for somebody to read here, and we'll move it off to the side. So the 30-point consolidation that we may be looking at right now, being busted to the upside here. We'll see if the NASDAQ looks like right now it's pulling back. We'll see if it's going to test and hold. This has got a hammer candle. We'll go take a look at that 30-minute hammer candle here briefly in a moment. But the upside potential, remember, this is a measured move, so those measured moves are equal to or greater than the actual measured move out here. So if you're looking at 36.10, you're looking at about 36.40 would be the upside potential of the NASDAQ. So we got 36.40. We'll just put that in there. We'll go ahead and keep track of it. We'll put upside potential out there, because it could be more than that. And then obviously there's downside potential. So the downside potential, what did I say? That was at 35.80. So you take away 35 points, you're at 35.50 would be the downside potential if that consolidation gets busted out to the downside. Right now what we have to deal with is upside potential as we take a look at the NASDAQ, because it's trading above that area. Now it's coming back and it's going to test on top of the consolidation pattern. That's really what it is that you like to see out here. So we're going to get some information. But where we're also going to get some information is back down here at about 6:30 this morning. There was a hammer candle pattern that had formed out here. And was confirmed on that very next session. In fact, if you take a look at hammer candles, that is what I call a type 1 hammer candle out here. So if you take a look at the low of that hammer candle, it says support ought to be at 36.05. And really no resistance. Hammer candle just acts as support. It doesn't act as a resistance level out here. So it's 36.05. The resistance, or the support, really, that we should say, because we're not looking at resistance here right now. The support really is really the top of the consolidation pattern that we can see here, in essence, has been tagged here, as we've seen a low here of 36.10.75. So, you got to give it just a little bit of room out here. So it's from this NASDAQ, from the NQ, from the 30-minute chart, where we're going to get a ton of information out here. If you talk about hammer candles, there was a hammer candle actually formed inside the NQ, and that was at 11 o'clock yesterday. And once it broke below that level, that low was at 35.92.50. What the NASDAQ did was it went down to the bottom of that consolidation, that area that happens to mark the top of that gap down candle that took place at about 7 o'clock in the morning on January 2nd. So parameters are really well established for us inside of the NQ. If it gets back inside of the consolidation, I would have to say if it breaks the low of that hammer candle at 36.08.75. If you're long, guess what? You're wrong. You would be wrong on the trade. And what that actually means, folks, at least what it means to me, is you got to take a look at, well, where's the next place where price would fall back to? Well, that's already been identified, hasn't it? I mean, this is about as easy as you possibly can get. So if you were trading these markets on an intraday basis here, you're going to have an opportunity to either go long or go short. Of course, you always have that opportunity, right? Well, here we've identified the line of demarcation for you. Your opportunity to really maybe take on a long trade is a little spike of 36.05. That's the low of the hammer candle. If it holds, if it breaks, you'd want to flip to the short side of that trade, because where price will travel down to is the next support area. And we know the next support area is the bottom of that consolidation pattern. It doesn't get any easier than that. Now, here's the cool thing. What we're doing on a 30-minute chart, you can do it on a weekly chart, you can do it on a monthly chart, you can do it for whatever the time frame it is that you trade upon out here, and it's just as simple as that. The market is absolutely transparent. The bulls and the bears, they can't hide. You just need to be able to learn how to use these signals out here. If you'd like to learn more about how to use those signals, just simply go ahead and click on my name on the homepage at TFNN.com. There's a couple of workshops that ought to pop up for you that you can take a look at. And I would be happy to, teach you how to do that. You can also send me an email, steve@tfnn.com, and we'll direct you to the proper training out there. But it works on all time frames, and maybe that's the kind of massive action that you want to take. Let's go out to Austin, Texas, to our man, John. John, thanks for calling. Thanks for holding. How are you today?
Way too good, Steve. How about you?
Well, if you're way too good, I want some of that way too good juice that you're drinking in the morning.
Hey, buddy, you are. You just, I'm sure you realize it also. You know what I'm talking about.
I do. So you're taking a look at Freeport-McMoRan, FCX, struggling a little bit here this morning. I moved down with some volume yesterday, gapping down this morning. John, tell us what you're doing and how I can best help you out.
Well, excuse me, I'm down about 4%. And what I was thinking about doing is selling that and taking the money and putting in Randgold Resources. What do you think?
Well, let's take a look at what it's doing here this morning. So you got FCX, which is a great, on a longer term basis, a great looking stock chart out here. Now, what I don't like that it did here yesterday was it broke this little rising price channel. So, John, I don't know if you're watching this on TigerTV or not, but if you are not, what Freeport-McMoRan did, if you come off of the lows out here, well, first let me answer your question. Because what you're wanting to do here is you're wanting to trade out this equity for Rand Gold. So we got to be able to take a look at both. And if we take a look at what FCX here may have done, let's take a look at the volume. So this morning it's below the swing point, which was January 14th at 12 million shares. Yesterday you came down with 23 million shares. And the actual low, let's see, 35.18. Your close yesterday was 35.22. This morning you've gapped down below it. You've already done 2 million shares. This says that FCX is probably going to trade back to about the next level would be 33.59, maybe 32.58 out there. So it sounds like you don't want to take that kind of heat. I'm hearing.
Exactly. And the volume is the whole problem with me.
Yeah, no question. There was some big volume. And really up until yesterday, this was really a great-looking stock chart because it was one of the strongest that was out there. And that little rising price channel I was referring to that takes you all the way back to June 24th of 2013, that level was busted. Now, in order to really get bearish on FCX, so here's what I would be taking a look at if I were you, is I would be really paying attention to the December 3rd swing point. It's only got 8 million shares, and you're trading into it right now, or you're at least testing it. If that area holds, that actually could be a low inside Freeport-McMoRan, 33.81. So you're 34.86. So that's the area, because that was a nice little Gartley buy pattern, and for price to come back and test that level, that would be kind of normal. So you might want to take a look at how the volume here trades and plays out today. Of course, if in fact this gets volume today of more than 12 million shares to the downside, you've got a confirmed A to B equals CD, and it says to me that that area probably doesn't hold. Now, Rand Gold Resources, the ticker symbol on that is what? GOLD, is that right?
Yes, sir. But Steve, one other question: if on FCX, you know, I'm down 4%. I'm not hurt bad. I don't have a huge position, so I'm not hurt bad. So I could actually let it pull back to 33.81 and add to the position. So if you were me, would you let, because 4% is not going to kill anybody. Would you let that pull back down to if it pulled back to the 33.81 in less than 12 million shares and just add a taste to it? Would you do that?
Well, here's what I would do. I never like adding to a losing position.
Okay.
But I would take a look at the two trades separately. Unless it's just the same capital that you're using and you're saying, I got X number of dollars and I'm going to allocate it to a gold miner, and, the question is it going to be FCX or is it going to be, Rand Gold? Now, because you're willing to add to it, you've already, we can surmise that you've got some extra bullets out there to fire away. So Absolutely. I would take a look at the two trades really kind of independently of each other. In my opinion. And so, because I don't think you have to be, I think you have to watch this trade and manage it. That much I do believe. And because if this thing does get away from you, if it gets below that December 3rd, that 33.81 level, the question is, where's the next stop for FCX out here?
Exactly.
But so I would manage the trade that way. Now, Rand Gold itself, as a separate equity out here, and we can come back and take a look at both of these for you. So does that help you at least with regard to my answer? I mean, I wouldn't
Absolutely.
Add to a losing trade.
Absolutely, exactly.
If that were now the only difference would have been. And because you say you don't have a large position, if when I got in the trade, I was trying to scale in, that's a whole different subject matter.
Sure.
Okay. But it doesn't sound like that's really how you were approaching that trade. And so I would always stick with that same strategy out here. And you want to really add to winners and, and losers, make sure that you're managing them as you are. Rand Gold Resources, on the other hand, this thing here was up yesterday with 1.2 million shares coming into a little swing point out here from December 10th. It only had 1 million shares. Boy, that's pretty nice. Can you hold on through this next break here, John?
Absolutely. Be happy to.
All right. We're going to go back out to John when we get back. We're going to go take a look at Rand Gold Resources. GOLD is the ticker symbol. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow off 37 points right now, trading at 16,377. Composites up 5 points. So we got the battle between the Bulls and the Bears for sure. We're going back out to Austin, Texas, to our man John. We're taking a look at two equities, Freeport McMoran FCX and Rand Gold Resources. One other piece of information for you, John, on FCX. I happen to pull up my Rhodes Momentum Indicator stocks out here, and on the bottom I've got the daily. The top is the weekly out here. Your 200-day exponential moving average is at 34.07. So that should be a final area of support out here with regard to Freeport McMoran. So it's another spot for you to be paying attention to if you continue to hold on to this equity.
And if
with regard to,
I'm sorry.
Go ahead.
If it were you, Steve, and you were in it, would you hang on to the 3407 and the 3381? Do you think the company is a good enough company to hang on and see what happens?
I do like the equity on a longer-term basis. In fact,
Yes,
my subscribers know that we're actually looking for spots to get in on FCX.
Okay.
So, I had a spot. We missed it by like 3 cents. It went ahead and moved up to our target, and I've missed two entries in the past couple of weeks here by 3 cents each. Both of them took off, so anyway, in any event, that's okay. So I do like it on a longer term basis right now as we speak. That could change tomorrow.
Exactly.
Depending on what happens today with regard to volume out there. But I want to be able to give you, I want to be able to give you some of these benchmark areas for you to be paying attention to. In the case of Rand Gold, that's acting very strong. It's just like the place to be. You are in the right sandbox because the strongest sector, period, without a doubt. And when I talk about a sector, I'm talking about if you take a look at everything that is contained within that sector, it is the mining sector. It is the strongest, most bullish sector that is out there. So you are in the right sector to be playing in. And if we take a look at Rand Gold Resource, what I like about this yesterday got above the 50-day exponential moving average. So it did that. It had some increasing volume. That now should be potential support level 66.27. I can't tell you whether it will pull back to 66.27 or not. It should find some resistance at about the 200-day exponential moving average. That is up at, the 55 days, what I was looking at here, where it pulled back to. But the 200-day, about 73.39 is where that might be some resistance. What it's really trying to do here, it's trying to get up to this island reversal pattern. This formed one of the most bearish reversal signals. It did that on November 7th. It was really the November 6th, 7th, and 8th, where it created that little island, and then it moved down here. Now, in the case of Rand Gold Resource, I'm not sure if these islands, because of currency conversions, just how accurate they might be. But in this case here, what this is trying to do, this is a nice, strong-looking stock. As far as picking your entry point, had you picked an entry point, or today were you just going to swap one for the other?
Well, excuse me, I was going to swap one for the other, but I think I'm just going to go ahead and buy the daggone thing.
Yeah. It's strong. It is strong. I'm hoping, okay, which is not a great trading strategy, but you got to hope every now and then, right? I'm hoping for a little bit of a pullback today and tomorrow, just in the miners, but I don't know if we're going to get it. So just use a wide stop, just use proper position size out there, and you should be okay. But this is the sandbox you want to play in, no question about it. All right, my friend?
Sounds great, buddy. Hey, I so appreciate, Mr. Rhodes, I so appreciate your time that you take, man. It is such an honor to speak with you. All of God's best to you and your family. Thank you so much.
We appreciate that. It's our honor that you spend time listening to us. So have a great day. And, folks, we're out of time today. So if you are off to start your Wednesday, have a terrific Wednesday. I'll look forward to speaking to you tomorrow morning. Or how about maybe in about 8 minutes out there. Have a great Wednesday, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.